Good evening, everyone. Good afternoon. In fact, on behalf of Broly Books, I would like to welcome you to a very special discussion, one that will kickstart our promotion for Tamal Bandyopadhyay's much-awaited book, Pandemonium, The Great Indian Banking Tragedy. At the outset, I would like to give a very special welcome and express my gratitude to Dr. Debroy, Chairman of the Prime Minister's Economic Council, for being part of this discussion. He also happens to have written the foreword to Tamal's book. So thank you, Dr. Debroy. Dr. Debroy really needs little introduction. Apart from his numerous contributions over the years in the economic sphere and policy making, it is his achievements as an author and prolific translator that are perhaps lesser known, equally remarkable. I did not know that he has written over 100 books in the field of economics, polity, Indology, and Sanskrit. And he is one of only two people to translate the unabridged version of the Mahabharata and Valmiki's Ramayana into English, both which run into several volumes. Quite a remarkable feat. Thank you, sir, so much for being with us this afternoon. Tamal Bandyopadhyay is arguably India's finest journalist covering the finance and banking sector. Widely respected and followed by the entire BFSI community. In the past 25 years, he has won several awards and authored many best-selling books. But by his own admission, this one is perhaps his best and biggest achievement as an author. While Tamal may have started writing this book last year sometime when we commissioned him, it is safe to say that he has been probably subconsciously working on it for the last 2 decades. Yes, that is how vast the scope and canvas of this book really is. In the words of Uday Kotak, it reads like a Shakespearean tale on Indian banking. And Rajiv Kumar, Vice Chairman Niti Aayog, calls it a financial sector policy thriller. Such a magnum opus has perhaps never been attempted before. Only someone with the insight, access, credibility, along with an objective bird's eye view could have written it. And as his publishers, we are very excited to have everyone read it in a few weeks. As I mentioned earlier, today's event serves as the official curtain raiser leading up to the release of the book in early November. It is a discussion on Indian banking yesterday, today, and tomorrow. The discussion will be moderated by Kumaar Bagrodia. Kumaar is the founder of NeuroLeap, India's leading applied neuroscience company using technology for better mental health. Often called India's brain enhancer, he focuses on neuroeconomics and high performance. Thank you, Kumar, and we look forward to an engaging conversation. Now, before we kickstart the proceedings and I hand over to Kumar, I would like to request Dr. Debroy if he could show us the book for the very first time. Ladies and gentlemen, presenting Pandemonium, the Great Indian Banking Tragedy. Just before I end, I would like to let you all know that the book is available to pre-order from Amazon starting today. We will be sharing links across all platforms shortly. Don't miss your chance to book your copy, which you will receive on the very first day of release in early November. On behalf of Broly Books, I would once again like to thank you all. Enjoy the discussion. Over to you, Kumar.
Thank you, Kapil. Welcome, Dr. Debroy, and thank you for doing the honors of unveiling the book. We'll request you to give your remarks on the topic for today's discussion, which is Indian banking, yesterday, today, and tomorrow.
Thank you, and let me start by thanking everyone involved, and Tamal in particular, for having invited me here today, and Tamal especially for having given me the opportunity to read the book earlier, which is why I happen to have written the foreword. It is sometimes customary to write a foreword without reading the book, but let me assure you that I have indeed read Pandemonium. In all fairness, I should not have been asked to speak first because today's event is about the book. Nonetheless, since I've been asked to speak and we will talk about the book later, I want to make a few points about the banking sector in general. Some of these points are questions, and these are questions that we should ask ourselves. And these are questions which, by their very nature, are rhetorical questions that we should discuss and debate. And some of them are addressed in the course of the book. Quite often, although it is about banking yesterday, today, and tomorrow, quite often we are fixated on what is happening with banking today, not so much yesterday. The reforms in India started in 1991. What were those reforms? Those reforms were fundamentally about the external sector and about industrial delicense. Most of the other reforms were about the domestic economy, and most of these reforms articulated and talked about so many years ago are reforms that are often yet to be implemented and are gradually being implemented. The one exception I can think of is the financial sector. In the financial sector, incrementally since 1991, reforms have indeed happened. However, I should also say that the financial sector is not only about banking. Much of the discourse about the financial sector often tends to be focused on banking, but there are other aspects to the financial sector also. Whichever way you define the reforms are about competition. Competition requires entry. It also requires exit. And this is something we sometimes fail to recognize for the capital markets, that competition and reforms also means exit. And some of the resistance we see to reforms, in particular in the IBC, is a resistance to exit. When we are talking about banks, most of the time until recently, we meant public sector banks. When one talks about public sector banks, there can be different metrics for evaluating the success or the failure of public sector banks, particularly since bank nationalization. And depending on the metric that is used, you have some degree of success. For instance, bank branches, for instance, financial inclusion, and you have some degree of failure, particularly if one is making cross-country comparisons, such as in terms of credit by GDP. I should also flag this word privatization. What does the word privatization mean? Because it means two different things. One is selling of equity in public sector banks. That's one form of privatization. The second kind of privatization is not selling of equity in public sector banks, but permitting private entry. That's another kind of privatization. And insofar as the banking sector is concerned, we have seen that kind of private sector entry. Often people say one should privatize public sector banks, because if you privatize public sector banks, you will delink them from public sector behavior, you will delink them from the Prevention of Corruption Act, you will prevent them from vigilance inquiries, you will prevent them from the risk aversion, and you will enhance the capacity of public sector bank managers who are all hamstrung by public sector nature. Two questions I want to ask ourselves. A, in the present situation, who will buy these banks? When I have the option of setting up a new bank, is it worth my while to buy these public sector banks? And the second point I want to make is an important one, that banks were not nationalized under the Companies Act. So even if the government equity drops below 50%, the way I understand the Bank Nationalization Acts is that they would still be subject to government control. The next issue I want to flag is again on that metric of success or failure. Is India is an economy where we are trying to transit from informal to formal. And bank credit is still largely for the formal sector. The MSME sector is still largely not able to avail of credit from the formal banking system. And there is an issue here about the availability of credit vis-a-vis the cost of credit. Quite often, we are obsessed with the cost of credit, but to my way of thinking, often it is about the availability of credit. We should also ask ourselves, what kind of credit are we talking about? Is it for working capital or is it for project finance? Do the public sector banks have the capacity to undertake project finance? Or is it the case that we need to revisit the question of DFIs, the developmental financial institutions? Particularly in view of what has happened in banking in the immediate yesterday, not many years ago, I think we should also ask ourselves the question, what do we expect the rate of growth of the financial sector to be compared to the rate of growth of the real sector, measured, say, by the rate of increase in nominal GDP? The two have to be proportionate, and one can convincingly argue that what has happened, what has gone wrong in the last decade or so, is the disproportionately high rate of growth in the financial sector compared to the rate of growth in the real sector. One reason for this happening, for the NPAs increasing, is what the book also talks about. It is the nexus between the political system, the bank manager, and even the so-called bureaucracy. What I want to flag here is the belief in competition is often about the private sector coming in. The private sector banks have not exactly covered themselves with glory in all of this. And one reason for the increase in risk aversion in recent years is the increase in vigilance issues. So therefore, we are talking about broader governance issues. We are not only talking about regulatory oversight by the RBI, but broader governance issues. We are also talking not about public sector banks and private sector banks as scheduled banks. We are talking about NBFCs. We are talking about cooperative banks. We are also talking about broader governance issues ex ante, not ex post. Ex post, it is easy to be wise, but ex ante, has the corporate sector covered itself with glory? Have the board of directors covered themselves with glory? Have the auditors covered themselves of glory? There is also the issue of the role of law, the speed of justice, the lack of a sufficiently credible punitive element to punish malafide intent. There have been committees and committees on what should be done to resolve the banking system. It's always easy to be wise after the event. There are plenty of RBI governors in recent times who've written books. They've been extremely wise. But the question that still remains is why, despite all of this wisdom, do we find it so very difficult to determine banking for tomorrow, not just for today and not just for yesterday? Thank you once again.
Thank you, Dr. Debroy. I think those remarks really set the context for the mood within the banking fraternity right now, and also for Tamal's book. And like you mentioned, you've read the book, you've written the foreword for it. Do you think we will find some of the answers to these very important questions in this book?
The book actually raises questions, which is the primary role of a commentator. The primary role of a commentator, I think, is not to provide the answers. The primary role of the commentator is to flag the issues, to flag the concerns, and Tamal's book does that very, very successfully. He raises questions for the regulator, he raises questions for Indian companies, he raises questions for auditors. But these questions should be answered by the broader government system. And of course, I am not going to try and speak on behalf of the finance ministry. That's not my job, that's not my mandate. But the point I want to make is that the banking sector is one where if we just tinker with one little bit, I don't think we'll resolve it because it's all part of a big jigsaw. So whenever someone says, let's just do this and everything will resolve itself, I don't think that is going to happen. We need to take a complete overview of governance, which does not just mean the government, of governance in the financial sector.
Right. Tamal, coming to you, your book has got a lot of advanced praise from Mr. Uday Kota, Dr. Rajiv Kumar, and several others. What really are you talking about here? You've called it pandemonium, and you're talking about, the great Indian banking tragedy. What can we expect?
Well, first, my gratitude to Dr. Debroy. He trusted me because even before writing the first word, I reached out to him. I requested him whether he would be kind enough to write the foreword for the book. Um, and he said yes. So thank you, Dr. Debroy, for that. Um, and I think he has answered your question. My job as a commentator is to raise certain questions. I don't know the answer. So there are three ways one could have written the book. One is have a linear narrative with charts and graphs and say what all happened, chronicle. That's the kind of thing. Second way is of course giving the pearls of wisdom. Uh, I have not followed the first one. I can't do the second one because I am not a wise person. I'm still a student of banking and continue to remain to be. So what I followed is sort of telling a story, which as a journalist I have been trying to understand how to tell a story. So actually, the real life characters and how the scene has unfolded. So that's the thing, and to some extent, it's like Akira Kurosawa's 1950 classic Rashomon, which started with a murder of a samurai, and then there is a priest, there is a woodcutter, and there is a bandit, and they are giving their different versions. So my book also in attempt to that. The bankers have their own story. The corporate guys have their own story. The investigative agencies have their own story. The regulators has its own story. The owner has its own story. And I reached out to people, and judiciary has its own story. So I tried to see everything that has been happening in Indian banking, whether it is insolvency code or whether it is growing non-performing assets or whether it is bankers are being arrested through different lenses, through different angle, and through real life people. I have restrained myself from giving any kind of advice or solution because I am not capable of doing. So, Kumar, if you are interested, what exactly happening in Indian banking, uh, probably you would find certain clue what is happening. And finally, I think you did not ask me the question, but you were saying that why I am calling it a pandemonium and why I am calling it a tragedy. I wish I could have called it a comedy. If the publisher allowed me to rename it, I would have said the Great Indian Banking Comedy. Because actually, it's a very comical. The way we are treating banking, which is a proxy, everything depends on banking, economic growth, and everything. But the way we have been treating, to give an example, when you go for the consolidation, the first big experience of consolidation in public sector banks, we find that the CEO exits and the next CEO comes after months when the consolidation process is on. Is this the way to treat such a precious experiment in Indian banking? So it's a very comical in some ways. I wish I could have called it comedy. And Pandemonium, I think Bibek Debroy should know today's limerick. He didn't mention the Rajya Sabha, bigger House of Parliament, but he wrote his limerick on Pandemonium. So it's a basically it's a very wild, noisy scene, and it doesn't last much. But in Indian banking system, this noise and wildness, it's been pretty long. Still, I'm calling it Pandemonium. I'll just take 30 seconds or 1 minute. Milton first time, I think, in his Paradise Lost, coined the word Pandemonium, which is a capital of hell. Now, in Indian mythology, if you see, when the Asuras defeated Devas and they took over the universe, and there was a churning Samudra Manthan, and to get the nectar of immortality. And then what happened, we find, is this: the lethal poison, halahal, was released, and Shiva had that halahal and became a Nilkantha. In Indian banking context, RBI actually did the manthan through this so-called AQR, asset quality review, and then the halahal came, the poison, that's the bad assets. But we are still in search of the Shiva who can absorb the poison of halahal and become a Nilkantha. Can the government do this? It cannot, because it has fiscal constraint. Should we go back to privatization and let the some private entities take over the bank and consume the poison? Let them be Nilkantha? We do not know. So the Pandemonium is not at a gimmickry. Actually, I thought about it, and that's why I went for this title. Thank
Yeah.
you.
So Tamal, your book is going to come out in close succession to two very recent and important books, one by a former RBI governor and another by a former RBI deputy governor. And obviously, they've given a lot of details and a very different narrative on what's happening in the banking system in India. Some of the issues it faces, challenges, so on. How is yours different? Are you going to help us identify the Shiva and how we can redo the manthan, or give us some
No,
insight?
it is very different. You are referring to two books, I think, written by the former deputy governor and former governor. And as we speak, yesterday there was a paper released by a former deputy governor and a governor.
Right.
So there have been lots of things, but my book is completely different because I don't have the knowledge of a central banker. They know what exactly is the problem and what exactly is the solution. As I said, I don't have the knowledge. I can do that, but what I can do that to the people of India and to people overseas who are following Indian financial sector, telling the story. Just to give one example, is this: say all of us know that Indian banking system now got saddled with huge pile of bad assets. Now what was happening is this: corporate India was using the banking system. They were swapping debt with equity, actually debt. They are not bringing their own money. They are using bank money, and that's how they are doing their business. It's all known. It's also known that Reserve Bank of India did the first of its kind AQR, asset quality review. That's how it all came out. But do you know how this AQR was done? Do you know how Reserve Bank of India formed a core team, and the core team was operating 24 by 7 for months, and it was not from the central office of Reserve Bank of India from the Mint Road. It was away from public glare from the corporate office. And there, how the inspectors were actually looking at each and every bank's balance sheet, and they were finding out, hey, this particular large corporate was a non-performing assets for 89 days. On 19 days, the money gets into bank A and become performing fine. And then 2 days later, they find that the money gets out of bank A and goes to bank B. Another 2 days later, from bank B to goes to bank C and then bank D. So this is how the banks were camouflaging or evergreening their
Sure.
evergreening their book and staying away from showing the world that how bad was the situation. So it was just like Indian Central Bank was operating like a Scotland Yard. So that's how they figured out how how the banks were actually giving a loan, sanctioning a loan, but the disbursement was different days. Bank A is giving today, Bank B is giving after 2 days, Bank C is giving after 3 days, Bank D is giving after 4 days. And you call it circular trading, you call it whatever you may.
Sure.
That's how the money was circulating within the system, from banks to non-banks to other entities. And the RBI could detect this. Before that, RBI brought in its place on platform on somehow real time, real time, whatever you call it, you need to submit the data. So Krilik, that's the platform is called Krilik. I'm not getting into the technicalities. So armed with the Krilik data, how Reserve Bank of India team cracked it. So this is only one example.
Sure.
There are many more, but that's the story which the governors and deputy governors book will not write, because they can't talk about their confidential thing.
Sure.
It's not in public domain. I bet, Kumar, I'm not boasting, you will get to read things which you do not know. You will get surprised. You will ask yourself, oh God, is this true? But I stand by every word whatever I have written.
Earlier on you mentioned that you've written about real people, real characters, investigations, people being put into jail. You know, who are some of those?
Sorry, sorry.
You mentioned about some real characters you've written about, or people who've been investigated, or who've sort of been put in jail, and those sort of things.
Yes, yes.
Give us a flavor of what we can expect on that aspect.
No, basically, I mean, there are many things that I've done, but here you will get to see how, say, a banker, um, going out of his evening, getting out of his house for a morning walk, and going for a yoga class after the morning walk. And coincidentally, in the yoga class that day, there was no yoga practice, but there was some bhajan, where he heard that it's very critical to be mentally tough, come what may. You should never lose your compose. And that gentleman comes back to his house and find the CBI team is waiting to be whisked away. uh, so how the bankers were picked up from, whether it's Gurgaon, or whether it's in Mumbai, in different parts, in different cases, and how they were actually, in a very filmy way, they were picked up, and they were brought to the CBI office at BKC in Mumbai and told that, gentlemen, you are under arrest. His his mobile phone and laptop has been all been taken away, and they were taken to the Arthur jail, Mumbai's famous or infamous Arthur jail, and where the 60 plus retired bankers, they were meant to sleep on the floor, and that squat latrine they were to use. How they had to, there's no cup for tea. Next morning they had to cut a water bottle and make it a tea cup. So these are the stories, these are the real life characters, these are the stories. And of course, the other real story, which is actually, I think, very important segment of the book, Kumar, I interviewed, and it's a no holds barred interview with four governor of Reserve Bank of India, beginning Dr. Rangarajan and Dr. Reddy and Dr. Rajan and Dr. Subbarao. Four governor, they have different perspective, but the set of questions were the same questions. Basically, what has gone wrong with the Indian banking system and how can be corrected. And these are all real life interviews. It's not done through email. Okay, so it's all interactive, real life questions. So this is a very critical part when it's a real character. The four governors, yes, they are writing their own books, but they are the way they want it. But here they are answering my questions. And if you ask me, each and every character, each and every chapter is actually could have been a book. Whether it's a Yes Bank story, or whether it's the NBFC crisis, ILFS or DFHL, whether it's an IBC, whether it's a ICICI Bank, whether it's banking consolidation, whether it's with Bibek Da mentioned, Bibek Debroy, sorry sir, Bengali, I just ended up calling you Da informally. Dr. Debroy mentioned the rating agencies. So whether the rating agencies. So each chapter actually has the potential to become a book, and which is why it's a pretty large book. In fact, before he started, Dr. Debroy was telling it's like a, he said something else, but he meant is it's like a big brick. It's a pretty 150,000 word book. So each and every chapter is actually a book by itself.
Sure. I'd like to pose a question, Dr. Debroy, to you and Tamal both. Two important things came out. I mean, we already know that one, the banking financial services sector is by far one of the most important ones in any economy, and more so in India. And bankers are a group of a very small number of individuals who are controlling the fate of many, with their decision making, and some of the names that Tamal just gave about banks and financial services companies who've gone rogue in many ways. So, if we were to get into for a minute just on why that happens, yes, we can talk about system failure or auditors not doing their job, on and so forth. But at an individual level, since these are people who are supposed to be holding the keys to so many people's fortunes, what is going on? What do you think is going on? I know the neuroscience of decision making is very complex. You can attribute it to hubris or anxiety or the lust for growth or pure greed. But what in your view is happening, and why does it keep happening in India over and over again?
Um, I presume that question is directed to me, although it's a question that Tamal Bandyopadhyay should answer. Nonetheless, let me make a few remarks. The first remark I want to make is on a question that you earlier addressed to Tamal Bandyopadhyay. And I don't think Tamal will get me wrong. In fact, he also said something similar. He's not an academic, he's a columnist. He's good at telling stories, not fiction, but stories that a columnist tells. And that is what this book is. It's telling us stories. But by its very nature, this book is fixated on today and what's happened in the last decade or so. That's the nature of this book. There are stories connected to the reason why bank nationalization took place. Someone could do a storybook out of that also. Someone could do a storybook out of why Mr. Huxer at that time resisted bank nationalization. Someone could do a story about why the Prevention of Corruption Act was introduced and why it had those sections. So there is a scope for a story on banking history, but that's not what this is. What I want to underline, though, is two authors keep turning up, or have kept turning up. One is Shakespeare. And the other one, Tamal mentioned, is Milton. I never asked him, and I'm still not going to ask him why he picks on Milton. Is it because there will be a paradise regained in some interminable future? Or is it because in his subconscious it registers that Milton was blind? And the reason I'm saying this is I think the underlying message is all the time we have knee-jerk reactions on this is happening, that's happening, this has figured on headlines, etc., etc. But we are blind to a governance and systemic problem that plagues the banking system, that plagues the financial system, that plagues governance. And the costs of that, what does it mean to say that the cost will be borne by government? The government funds itself out of the public exchequer. So as a whole, we citizens are going to end up paying for malafide decisions taken by bank managers, taken by promoters, taken by errant rating agents and auditors. Now that's not quite acceptable. That is the reason this book is important. It is very easy to blame X, Y, Z. Now, the direct answer to your question is this kind of cozy nexus goes on. Don't misunderstand my choice of words. It's a little bit reminiscent of a Ponzi scam. This kind of cozy nexus goes on as long as the going is good. But the moment there is an exogenous shock and the business cycle goes into a downturn for whatever reason, the moment there is an exogenous shock, then the can of worms begins to open. But the can of worms has always been there. And I think what this book does, it points to that can of worms being opened, but it's also telling us that the can was already there, waiting to be opened someday.
Right. Very, very, very well put, sir. Tamal, your response, what do
Yeah.
you think is
No
really
response.
happening,
Yeah. First to
with the
Dr.
bank
Debroy.
managers and
Yeah. First to Dr. Debroy response. Milton or Shakespeare is because, well, it's a little secret, and people will not touch my book after knowing this. That I'm a student of English literature. So I read them. I'm not student of finance or economics. I'm an illiterate person in that sense. So which is why all the literary, like my today this week's column also, I I mentioned about Cleopatra and somebody in Reserve Bank. There are people who are quite upset that I said that the chief operating officers, their RBI doesn't consider them at Cleopatra's. They get stale after 55. That's nothing because of my English literature background. It comes so. But on a more serious note, Kumar, I know you are a finance person, but interest in neuroscience. So you are probably asking why people turn this bad. Who I heard the word you called hubris. I also used it. Thank you for giving me this opportunity to talk on this, because there is a chapter called Fallen Angels. And this, trust you me, could have been an independent book, and Dr. Debroy has read it, so he would know this. So, right from 1990s, we had a Gopalakrishnan of Indian Bank of India. He had the record of the maximum number of getting extensions, and then of course he had to go to jail. Then we had Ramesh Geli, who actually used the bank as a pawn for playing in the stock market. But in the recent past, and the focus is on that, we have two persons which is now I've described. One is former ICICI MD and CEO Ms. Chanda Kochar, and second is Yes Bank CEO and of course promoter Rana Kapoor. In case of Chanda Kochar, is a classic case, and they are two different. Rana Kapoor is a promoter, and Chanda Kochar is a professional, and is a who started our career from ICICI. So in case of Kochar, I'm not saying anything which is new probably, but you need to read the book. Basically, it's a classic case of how a very powerful, strong CEO makes the board his or her handmaiden. Board eats out of the CEO's hand. That was the case of ICICI Bank till institutional. I mean, Supreme Court judge, former Supreme Court judge, they were appointed and got into all those kind of things and all. So the story is how you misuse your power and actually let the board eats out of your hand. So it's basically, it's a personality cult. You become too big. Beyond banking, you try to build your own persona. You want to become the most important in Asia, first in the world of finance space. And to do that, you do lots of things, and then you start feeling invincible. Nobody can touch me. So I don't know where exactly. If you ask me, when did it start? Is there any flashpoint? Is there any particular point from there that train starts? Does it start from becoming the CEO or somewhere? I don't know. But I wish Reserve Bank of India, in its fit and proper criteria, when you are giving both a license, like Ramesh Geli was given a license and Yes Bank, Rana Kapoor has given a license. So they take a close look at what is on fit and proper. And while appointing the CEO, they go for this, psychometric test, whether you have your, aptitude and personality tests, etc., etc., much deeper beyond your knowledge. So that's the it's basically the story of Indian banking personality cult. You become bigger than your bank when that's the probably the beginning, and you do everything to maintain that status, and then you end up misusing this. But Rana Kapoor's case, I found the point from where it started deviating. I think it's 26 November 2008, you know that Mumbai, the Pakistani terrorist attack on Taj, and Ashok Kapoor, a co-promoter, died in that attack. I think that was the turning point for Mr. Rana Kapoor. From then onwards, he got into a different trajectory. When Yes Bank was being born, they were trying to figure out what would be the name. There are four names doing around. One is Yes, one is Get. Five names. One is Yes, one is Optra, one is Getaway, one is Mint, and one is My Bank. So I have a graphical description how Rana Kapoor has turned Yes Bank into My Bank, and from then into No Bank for himself. So, and the last did attempt to save the bank, how the bank was saved, in the sense before even State Bank of India stepped in, how the new gentleman from Deutsche Bank was brought in, and how they tried to get back to the rail, and how the foreign investors were trying. In fact, money was put in a New York account of one particular bank. It was not too little, but it was little too late by the time the moratorium was imposed. So it's a very dramatic story. But to end of it, I think that personality cult has got over after this. The problem is when the CEO becomes bigger than the bank, then the CEO feels he or she is invincible, and then the hubris sets in.
Well, Tamal, perhaps very aptly titled that chapter you mentioned "Fallen Angels," because in some sense, the all the stakeholders around these individuals had led them to believe that they were, gods of banking in some way. I mean, whether it is the media, columnists, all of business media, the awards, the shows, everything. It was as though these were individuals who were single-handedly creating earth-shattering institutions with their decision making, with their acumen, so on and so forth. And it is this exact decision making which, at some point in time, like you mentioned, has gone rogue. Probably in one case you could figure out the triggering point, in other cases we cannot. Now, considering the importance of these individuals within those organizations and the importance of those organizations systemically, to the country, uh, shouldn't there be some way to figure out how to manage them better, not just not just the institution, but these individuals as well?
No, I think Dr. Debroy is in a better position in his from his chair. He can suggest, but I'm just repeating. I think when you become larger than your organization, then the problem starts. Like even look at Rana Kapoor. I give you the turning point when it started, when this co-promoter died, and he felt that now this is my thing. I'll start doing it. He tried to introduce a new concept in India. Basically, you have overseas, you have the junk bond market. We don't have a junk bond here. So he
Sure.
created a junk credit market. Kumar Bagrodia, you have nowhere to go. Come to me. You pay me 15% interest rate. I'll give you money. And of course, I will charge you very hefty fees. And even if you turn a defaulter after 2 3 years, through the combination of high interest rate and hefty fees, I would recover my money. So that was a business model. Well, fine, that's the business model coming. But the problem started, that's only one part of the story. Other part was running his family offices and focusing on him. As I said, it's becoming Yes Bank, becoming My Bank. And at the end of the day, it ended up no bank for him. So I've given a very graphic description.
Sure.
What needs to be done, I think, a regulator, what can do, I said, you need to take a relook at the fit and proper criteria. Who do you hand over the banking license as a promoter, as an individual, and also the psychometric state, like the personality test and other things and all. Beyond that, I think I refrain. I think Dr. Debroy will be in a better position.
Sure. Sure.
How to rein in the rogue bankers, how to prevent such occurrences.
Dr. Debroy, I think what we are trying to get at is that yes, there are some systemic issues and problems that we've seen over many decades, and every few years we will come up with some course corrections, but the rogues will always be ahead of the game in some way. So would we agree that it is not so much just a system issue, but also about individuals, about personalities, about people?
It's not that I have answers. I don't think there are easy answers, but I had posed the question a little bit differently. Some of the discussion that the two of you have been having just now is about individual decision making. But what I want to mention and what I want to flag is this: it is not only about individual decision making, it is also about collective decision making of us as a society. Tamal Bandyopadhyay mentioned a year and a month. And I think he certainly mentioned 2008. I think he mentioned November 2008. Candidly ask ourselves the following question. In November 2008, how many of us, including commentators, not just regulators, recognized that there was an incipient problem with Yes Bank? I'm inclined to think that very few people diagnosed this problem in November 2008. Which is why it is not just a question of individual decision making, it becomes a question of collective decision making when there is a herd kind of mentality. One is looking for successes, one is looking for role models, one is not prepared to accept failure, one is not prepared to accept failure of an entrepreneur and an enterprise. So in that particular sense, we have a governance problem that is much broader than the narrow ambit of corporate governance. And this is especially a problem when regulation is not just about, in any sector, regulation is not just about what the regulator does. Regulation has a certain element of regulation on the part of us as individuals, as enterprises, as entities. So if I continuously begin to blame X individual or Y regulator, I don't think we are pointing the finger inward sufficiently. And that is the point I want to make.
I think that's a very important point, and also something which needs to be captured well and looked into on how we can bake it into some sort of a framework, like Tamal mentioned. Whether it is fit and proper. How do you broaden that definition and go deeper in some way, and sort of have some systems in place to set the alarm bells ringing well in advance, rather than always it being a post facto sort of scenario. I know we are almost sort of running out of time. Just one final question to both of you, Dr. Debroy, and to you, Tamal. That we've in the book we've discussed a lot about the past and possibly the current tragic mess of the Indian banking system. Where do you see the future? What do you see some of the things which will happen or should happen?
Sir, Dr. Debroy, will you speak first? Or
No. It's your book. You should speak first.
Okay. No, Kumar, as I said, I don't have any prescription. But the only thing I can say is this: I am not representing any quarter in this book. I mean, neither the majority owner of the banking system, that's the government of India, nor the regulator Reserve Bank of India, nor the not the bankers, nor the customers. I try to give a 360-degree view. It's basically a combination of is a fly on the wall as well as a bird's eye view. And even on Reserve Bank of India, I think it has not come out showed itself in glory when it comes to supervision. What are the reasons there? I've explained to them. But if you see in the last few years, beginning 2008, you look at every sector of the financial system, whether it's non-banking finance companies, ILFS and Dewan Housing, whether it is cooperative banks, PMC, whether it is private bank, large private bank like Yes Bank, there are problems. And for the first time ever, we heard the commoners, you and me, asking ourselves, is our money safe with the banking system? And the Reserve Bank of India has been repeatedly coming out with statement, with tweets, formally, informally, uh, even on a Sunday, and telling that, hey, our banking system is safe and sound. When did we see this? When did we hear this? Never ever. I think only on 2008, post Lehman crisis, there was only once in my, I have been covering the system, the banking industry as a reporter for 25 years now. Only once post Lehman crisis, there was about one particular large Indian private bank which had a very small exposure to Lehman, and people thought that it may crumble. RBI came out and said with a release saying that this bank is safe, no worry on that. Apart from that, I have never seen Indian banking regulator telling us the banking system is safe, your money is safe, and talking about financial sector stability. So, what has led to that? I've tried to answer the question, and I have said that even RBI also. I think it needs to it needs to look for a new clothes. It can't be just ironing your old clothes. So that's it. I don't have any answer, but I try to find out what has point out what has gone wrong, certain thing how it could have been treated differently, like ILFS could have been treated differently, how it could have been, and how our investigative agencies, government, the banking system itself, and the regulator can behave in a different way to make the things better. That's it.
Right.
Dr. Debroy, sir, last word is yours.
No, I can't have the last word. The last word is in the last pages of the book. But I think there are two separate questions. The first question is a short term question in a way. When will credit revive? When will NPAs come down? When will public sector banks have adequate capital to comply with the Basel norms? Questions like that. When will we begin to see lending by public sector banks? This is a limited issue. I think the answer to this question is probably 3 years or thereabouts. But there is another question, which to me is a deeper question. We need to fix a system that's been built up over now about 50 years. Fixing that system, which has been built up over 50 years, it has built its own ecosystem over the last 50 years. Fixing that, A, requires a conscious decision that collectively we need to fix it, and B, fixing that will have a longer timeline. Something that's happened over 50 years cannot be fixed over 5 months, almost tautologically. That will take 10 years, 15 years, who knows? But part of the answer is in the last pages of the book.
Great.
Yeah.
Thank you so much, Dr. Debroy, Tamal. I think it's been a great, fantastic discussion. And thank you to our viewers for joining us. Please do go in and pre-order the book. It's available on Amazon, Pandemonium, The Great Indian Banking Tragedy. Thank you, everyone.
Thank you. Thank you. Thank you, sir.
Goodbye.